The Department for Work and Pensions has recently stepped up its focus on the UK's financial system, and the latest developments are drawing attention across the country. Officials have indicated that 3 of the nation's most significant banks are now under review, with the aim of tightening controls and improving oversight when it comes to pension payments. For millions of pensioners who depend on these payments to manage their weekly expenses, this move raises new questions about how their money will be accessed and what changes might lie ahead. The DWP's approach is part of an ongoing effort to deal with challenges such as fraud, overpayments, and administrative errors that have impacted the system for years. What makes this moment different is that action is now being directed not just at individuals or general policies, but directly at major financial institutions. This shift suggests that the government is placing greater responsibility on banks to monitor and manage pension-related transactions, which could have a very real impact on everyday retirees. For pensioners, the importance of reliable access to their funds cannot be overstated. Many are already struggling with the rising cost of living, higher utility bills, and the effects of inflation that reduce the value of every pound. At a time when stability is crucial, any uncertainty around pension payments creates understandable concern. While the DWP has framed its measures as part of protecting taxpayers' money and ensuring fairness in the system, the practical consequences are being closely watched. The issue is not about distant policy changes or proposals that may or may not materialize years from now. Officials have confirmed that new oversight procedures are already in motion, meaning that pensioners could notice differences in how their transactions are processed in the near future. This could involve additional checks when withdrawing money, temporary holds while accounts are reviewed, or requests for updated identification and documentation. Each of these measures may seem routine in isolation, but for those living on fixed incomes, even small delays or restrictions can have significant consequences. Over the years, many pensioners have reported difficulties when routine payments were interrupted due to compliance checks or administrative reviews. Some have had to wait days or weeks to regain access to their funds, leaving them unable to cover essential costs like food, heating, or transport. While these cases are not the norm, they highlight the risks of an approach that relies heavily on strict enforcement. By bringing large banks directly into the process, the DWP is signaling that such checks may become more common. At present, the names of the 3 banks involved have not been officially disclosed. However, given their status as some of the largest financial institutions in the UK, it is likely that many pensioners already have accounts with them. That means the reach of these measures could extend widely, from small rural communities where a single branch may be the only point of access, to larger cities where pensioners rely on cash machines and online transfers to manage their finances. The underlying motivation for this move is linked to the government's commitment to reduce the billions lost each year to fraud and error within the welfare and pension system. While this goal is widely supported in principle, the challenge comes when enforcement affects people who have done nothing wrong. For example, a pensioner making an unusual withdrawal or transferring money to a family member may be flagged by automated systems as suspicious, even if the transaction is perfectly ordinary in context. This creates a risk of unnecessary stress for retirees who are suddenly asked to prove their identity again or explain their spending habits. For older individuals, particularly those not accustomed to digital systems or lengthy verification processes, these situations can be overwhelming. Letters filled with technical language, long phone calls, or frozen accounts can cause anxiety and make people feel unfairly targeted. In recent years, stories have surfaced of pensioners being asked to repay funds because of overpayment errors, sometimes involving amounts they were unaware had even been miscalculated. Others have had payments paused without clear explanations, leading to confusion and hardship. These experiences underline the importance of designing policies that strike the right balance between preventing fraud and protecting vulnerable citizens. The current focus on banks adds another layer to this balance. By placing financial institutions at the center of enforcement, the DWP is effectively asking them to act as an additional checkpoint in the pension system. Banks may be required to flag unusual patterns, delay transactions for review, or request further information from account holders. While these measures are intended to safeguard the system, they can easily be felt as barriers by those simply trying to access their own money. This comes at a time when banks themselves are already facing criticism for reducing services. Branch closures have been widespread across the UK, and many institutions are pushing customers towards online and mobile banking. For younger generations, digital banking may be convenient, but for many older people it represents a real challenge. Some pensioners do not use the internet regularly, while others prefer face-to-face interactions when managing their finances. The shift towards digital-only solutions, combined with new oversight requirements from the DWP, could leave some feeling increasingly excluded. The broader context also plays a role. The debate over the sustainability of the state pension, the cost of the triple lock, and the pressures on public spending all contribute to a climate where pensioners feel under scrutiny. With limited incomes and few options to adjust their finances, retirees are particularly sensitive to any disruptions in payments. In such an environment, trust in the system becomes as important as the payments themselves. When pensioners lose confidence that their money will be available when needed, behaviors can change. Some may begin withdrawing larger sums in cash to keep at home, worried about potential freezes or delays. While this might feel safer, it can actually increase vulnerability to theft or scams. Others may turn to family members or charities for temporary support, placing further strain on already stretched networks of assistance. Food banks, community organizations, and local councils could face additional pressure if more pensioners experience interruptions in their payments. What is clear is that communication will be crucial. Pensioners need clear, accessible information about any changes that affect them. If new checks are introduced, the reasons must be explained in straightforward language, with support available to help people comply without unnecessary stress. Without transparency, policies designed to protect the system risk eroding trust in the very people they are meant to serve. It is also worth noting that not every pensioner will experience difficulties. For many, payments will continue as usual, and banks will process transactions smoothly. The DWP has emphasized that its intention is not to create barriers but to strengthen safeguards. However, for those who do encounter complications, even a temporary disruption can feel serious, especially when it involves money needed for essentials. Looking ahead, much depends on how banks choose to implement these requirements. Some may invest in better communication with older customers, providing dedicated support lines or in-branch assistance. Others may rely heavily on digital tools, which could disadvantage those less comfortable with technology. The role of government will be to ensure that enforcement does not unfairly penalize pensioners who are simply trying to manage their daily lives. For now, pensioners are encouraged to stay informed. Keeping records of payments, being aware of any official communications from the DWP or their bank, and asking questions when something seems unclear are practical steps that can help. Family members and community organizations may also play a role in offering guidance and reassurance. The coming weeks and months will reveal how significant these measures become in practice. If the cooperation between the DWP and major banks is handled with sensitivity, the impact on pensioners may be minimal. But if enforcement is applied too rigidly, or communication falls short, the consequences could be more widely felt. What remains certain is that pensions are not just numbers on a balance sheet. They represent years of work, contributions, and the promise of financial stability in retirement. Any policy that affects access to them touches directly on the dignity and well-being of millions of people across the UK. This is why the current developments deserve attention. They are not about abstract rules or distant debates, but about whether pensioners can rely on their money being available when it is needed most. As the DWP's strategy unfolds, pensioners, families, and communities will be watching closely, hoping that the system designed to protect them does not become another source of difficulty.